Hello everyone, welcome back to the Biz Time YouTube channel. This is Stock Market Weekly. The all share price index surpassed 21,000 point milestone during the week but experienced a slight pullback towards the end. It recorded a marginal weekly loss of 5.46 points, closing at 20,991.9. Meanwhile, the S&P SL20 index declined by 72.19 points, ending the week at 6,004.6. Foreign participation remained active with the foreign purchases amounting to 6.1 billion rupees. However, foreign sales stood at 6.9 billion rupees, resulting a net outflow from foreign investors. The consumer services sector showed a remarkable performance supported by strong tourist arrivals year to date. Arrivals are now ahead of previous year with the possibility of reaching the 2018 benchmark of 2.3 million. As a result, many companies listed under the consumer services sector have seen their share prices appreciate steadily over the past few weeks. In our previous episodes, we presented several in-depth company analyses focusing on businesses with strong growth potential. Our main objective is to evaluate recent financial performance, forecast likely outcome for the next 6 to 9 months, and review technical charts to identify possible price movements. In this episode, we turn our attention to a leading company in the capital goods sector listed in the Colombo Stock Exchange. Since we are discussing business within this sector, it is important to take a closer look at the recent movement of the Construction Purchasing Managers Index as an indicator of underlying industry activity. Sri Lanka's construction sector purchasing managers index rose 60 points in July 2025, up from 58.6 in June. This marks a nearly 2-year long expansion in this sector, continuing at faster pace. The growth has been driven by the steady increase in project availability, with the notable contribution from road development projects and private sector initiatives, which have pushed the new orders index higher. The quantity of purchase index also expanded further, reflecting stronger demand for construction input. Meanwhile, the employment index remained neutral, signaling the stable labor conditions. On the other hand, the supplier delivery time index stayed extended, pointing ongoing supply side pressure despite the industry's strong growth momentum. The sector remained optimistic about future, largely due to the expansion of increased government sector projects in the pipeline. With the continued growth in construction at an accelerated pace, this is expected to reflect positively on the listed companies in the construction and capital goods sector, as they benefit from heightened activity and a steady flow of projects, enabling stronger financial performance. Today, we will also highlight Central Industries, a company that has redefined industry standards by integrating innovation, precision, and sustainability across its manufacturing processes, from PVC pipe to water tanks and electrical solutions. Central Industries delivers products that help build stronger, smarter, and more sustainable infrastructure, positioning itself as a key player in the capital goods sector. Let's take a look at financial performance of Central Industries PLC. The June 2025 quarterly results were impressive across key areas. Revenue for the quarter reached 1.3 billion rupees, reflecting a 14% growth compared to June 2024. Operating profit grew 34%, increasing from 125 million rupees to 168 million rupees. Profit after tax stood at 137 million, up 23% year on year. The company's financial position remains strong. Total assets stood at 5.2 billion rupees, showing a slight dip in growth compared to June 2024. Total liabilities dropped sharply to 878 million rupees, a 27% decrease, largely due to a reduction in borrowings as of 30th June 2025. Meanwhile, total equity reached 4.4 billion rupees, reflecting 7% growth from June 2024. Net asset value per share stood at 180 rupees 90 cents, also up 7% year on year. The company's price to book value ratio improved 0.9x compared to 0.7x in June 2024. Importantly, the debt to equity ratio declined from zero point 0.3 to zero point 0.2, highlighting the company's low financial leverage. Cash flows also showed a notable improvement. The company generated 40 million rupees from operation during the quarter compared to a cash outflow of 167 million in June 2024. This turnaround was supported by easing investment in inventories, stronger receivable management, and higher payables. On the investing side, cash inflows dropped significantly due to the absence of financial instrument disposal that boosted last year's figures. Financing activities reflected cash outflows as the company continued to settle interest bearing borrowings. Overall, Central Industries has demonstrated a strong earning momentum driven by both revenue growth and operational improvement. With Sri Lanka's construction PMI signaling faster sector expansion, the outlook for capital goods sector remained positive. Low financial leverage, improved cash flow management, and rising investor confidence suggest that Central Industries is well positioned to sustain its growth trajectory in the medium term. Let's take a closer look at Central Industries PLC, focusing on its earning-based valuation, potential year-end price target, and growth prospects. Based on the profitability reported in first quarter of 25-26 financial year, the company's earning per share stood at 5 rupees 67 cents. Taking conservative approach and assuming the company replicates its performance across the remaining quarters, full year EPS forecasted at 22 rupees 68 cents. Currently, the capital goods sector is trading at an average earning multiple of 12.58 times, while Central Industries trade at significantly lower multiple of 4.52 times. If the Central Industries PL multiple re-rate closer to sector average, say around 10 times, the implied year-end price target would be in the range of 226 rupees to 227 rupees, representing a strong upside potential of 25% from the current level. The stock currently trading at 181 rupees 50 cents with a key support level of 174 rupees 50 cents. The RSI is hovering around 65, signaling that momentum is cooling off. The stock moved away from overbought territory. Recent trading patterns indicate resistance at current price levels, with the formation of red candles suggesting a possibility of short-term consolidation phase. However, buying interest strength near the support zone of 173 to 174 rupees, the stock could resume its upward trajectory towards resistance band of 189 to 191 rupees. On the downside, a decisive break below 173 rupees could open the door for deeper pullback. With strong earning visibility, attractive valuations, and sector growth momentum, Central Industries PLC continue to remain compelling opportunity in the capital goods space. We would love to hear your thoughts. Please comment below. Remember, always invest carefully and do your own research. That's it from this time for today. If you found value in this analysis, hit like, subscribe, and stay tuned for more market updates and insights. Thank you for watching. See you in the next one.